to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Coming up in a moment, we have an exclusive interview with Brian London, editor of Gold Newsletter and the CEO of the renowned New Orleans Investment Conference. Money Metals' Mike Maharrey and Brian discuss the gold and silver markets and the ever-growing importance of sound money. Brian also shares the origin of the New Orleans Investment Conference, how the recent re-legalization of gold ownership back in the 1970s was a key aspect of the launch of that conference, and also tells us why he thinks we've still got a long ways to go in terms of the gold price. Brian and Mike dive into that and much more, so you'll definitely want to stick around for a fascinating conversation with metals and financial industry insider Brian London coming up after this week's market update. Gold and silver have traded quietly, but with a positive bias this week, and it looks like we'll be closing out a week on a positive note. As of this Friday midday recording, gold is trading at $2,709, its highest mark in a month, and up 2.1% for the week. Silver, meanwhile, is coming at $30.65 per ounce, which is a gain of just over 80 cents or 2.8% since last Friday's close. At the same time, though, there are some very interesting developments unfolding in the global gold and silver markets, particularly with respect to silver. The implications could be huge, even if price moves have so far been small. Here's the situation. Since December, fears have emerged that President Donald Trump may impose tariffs on imports of many commodities, including potentially gold and silver. The tariffs would not be imposed on most countries, but Canada, Mexico, and China have been among those mentioned. As it happens, Canada and Mexico export vast quantities of gold and silver to the United States. If Trump slaps a tariff of, say, 10% on metals coming into the U.S. from those nations, that would have a huge impact. 10% on silver would amount to $3 per ounce. As a result of this worry, the price of gold and silver, as traded on the New York futures market, has risen sharply above the prices seen simultaneously in other markets. London is a massive hub for precious metals trading, for example, with many gold and silver transactions worldwide priced based on the London spot price. So this dynamic involving potential U.S. import tariffs has led to a large discrepancy in price between London and New York. That risk has created a high incentive for parties all over the world to get their gold and silver into the U.S. before any tariffs are imposed, including those buying metals in London, simultaneously selling in New York futures, withdrawing the metal from London vaults, and ship or fly the metal to the U.S. to deliver onto the exchange to close out the futures position. In silver, the spread between London spot and New York futures has at times reached as high as $1 per ounce. $1 per ounce is dramatically more than the cost of transporting silver across the Atlantic, so many opportunistic traders are scrambling to do just that and pocketing most of that $1 spread. This dynamic is having the effect of draining London vaults of gold and silver at an unusually fast rate, and at this point, these lower levels of vaulted metal in London could create price dislocations in that market too. At the same time, those who have short positions in the New York market are in danger of getting squeezed, especially if they are having trouble getting their hands on enough physical metal to deliver into their short positions. It's too early to tell, but these developments could lead to a true short squeeze in precious metals, particularly with respect to silver. We'll be watching this situation carefully and keep our readers and listeners updated at moneymetals.com. Well, now, without further delay, let's get right to our exclusive interview with the man behind the famous New Orleans Investment Conference, Brian London.
Greetings, I'm Mike Maharrey, a reporter and analyst here at Money Metals, and I'm here today with my good friend, Brian London. Brian is the publisher and editor of the Gold Newsletter. He is also the man behind the annual New Orleans Investment Conference. How you doing, Brian? Happy New Year.
Happy New Year, Mike. I'm doing great. I'm doing great. You know, I find even after all these years and knowing better that my emotions ride the roller coaster of the gold and silver price. So I'm holding steady right now.
Right. Yeah. Your mood is range bound.
Yeah, that's true. That's true.
Kind of has been since the election, I guess. But I think it's interesting, and you actually mentioned this in an article that you wrote that we've got published over at moneymetals.com/news, that, we talk about gold kind of correcting after the election, but really when you look at it in big picture, it wasn't much of a correction, was it?
No, it was at the time, but it just depends on how zoomed in you are. If you look at a 1 month chart, oh my God, it's terrible. 3 month, that's still pretty bad. 1 year, it's like, and one of the things I wrote about in that article was that, we were talking about a huge correction down to, at its lows, it took us down into the mid to low 2500s. Now, let's just flash back to a year ago.
Right.
And what we would have given to be in that situation where a severe correction that has us all nervous Nellies took us down to support in the mid 2500s. I mean, it's been a hell of a year. It was a hell of a year, and a lot happened over the course of that year. But we're in a pretty good spot right now. We really are.
Yeah, I agree completely. And I mean, even since then, the prices really held above 2,600. We were in that 25 range for a little bit, but for the last couple of weeks, we've been in that 2,600, 2050 or 2,650.
Yeah.
So not really too bad. So we kind of look back over the last year, and it's certainly, I would categorize it as a bull rally. What do you think, kind of looking back, was, and I know it might be hard to pick just one, but one or two of the biggest factors in your view that drove that gold price?
Yeah, I think you can't get past central banks, coming in and buying. And in fact, this year it kind of woke everybody up that they're really buying, but they had been buying for 2.5 years. They really started accelerating their purchases with the sanctions on Russia post the invasion of Ukraine. And that kind of points to that concern that they want some independence from the dollar and at some point being able to be sanctioned by the U.S. But beyond that, I think if you look beyond that, they're also concerned about the fiscal situation in the U.S., the risk involving debt service for the U.S. in other developed countries. And I think that concern has bled over into the investment markets, and we see some institutional and big money demand for gold for those reasons. And that is evidence of that. We're also seeing treasury yields rising. So I think that's a reflection of those concerns. It's not just, what rate are we going to get for our funds, but the risk of getting our funds back to some degree. And I don't think that that's a huge risk, but the bond vigilantes are definitely out. And I think that's one of the reasons we're seeing rates rising. And there's some disbelief that inflation has been whipped. And that's reflected as well. So it's kind of a hodgepodge, but it's uncertainty over the fiscal situation in the U.S. That I think not only central banks, but investors around the world are hedging their bets with gold and silver.
Yeah, it's funny. I did my podcast this morning, and I hit every single one of those topics that you just mentioned. So we're in complete agreement. And I think it's interesting. It's kind of if you want to theme that, it's like, ooh, is the dollar getting kind of dirty? I think that obviously it's still the reserve currency, and some would say the cleanest dirty shirt in the laundry. But I think you're right. I mean, why hold on to this fiat currency that's constantly depreciating, and that you're running the risk if you fall on the wrong side of the politicians in the United States in terms of your foreign policy or whatever, that you could have your assets frozen. And I think a lot of people are just saying, why not hold more of this sound money, gold, silver? We even saw Russia announce late last year that they were planning on holding some silver in their sovereign reserves. So interesting times we live in, right?
Yeah, and I, if you try to put that in some kind of a theme. I think it generally is safe haven demand. There's a few ironies there and interesting parts about that. We see dollar strength, and we tend to forget that the dollar is a safe haven investment around the world. So when there is global uncertainty, money flows into the dollar. So that kind of explains some of the dollar strength that we've been seeing. But gold, the playbook says gold should weaken when you have dollar strength and rising treasury yields. And it's not just now, but all year long over the past year, we've seen gold trade contra to that reality. And I think that reflects on the safe haven thing. Now, historically, you see treasury yields fall when there's a burst towards safe haven investing. Well, that's true if there's some kind of a geopolitical issue or something like that. But rising treasury yields can be a sign of safe haven investing as well, because the concern there is with the U.S. fiscal situation, as I just mentioned. So the dollar vigilantes are saying things are a little too risky right now with your debt service situation. We demand higher yields to reflect that risk, higher return, and that's why we're seeing, higher treasury yields as a function of safe haven investing right now. So it's the three pillars really of the investing universe that's kind of support everything: is gold as money, the dollar as the reserve currency, and treasury yields as really the liquidity sink of the world.
Yeah. And I think that's really notable to point out the fact that if you go back and look at last year, there are some things that you would think would be significant headwinds to gold. I mean, for most of the year, we were operating in what, at least looking back over the last 10 to 20 years, was a high interest rate environment. We did have a period of dollar weakness when the Fed started kind of jawboning about lowering interest rates. But nevertheless, we still had this, well over 26%, approaching 30% gains in gold, despite what you could consider a lot of headwinds. And I keep making the point that, should we have a recession or an economic crisis, or, the debt bubble bursts, it's hard to even imagine what the ceiling for gold might be in that kind of scenario.
Yeah, and people argue, and they're right, that the U.S. is not going to have a classic default. It's not going to stop paying its debts because it can print up whatever it needs to. But that's the issue, isn't it?
Right.
That it can just print up whatever it needs to. So it's not so much the classic one-step default, but it is a slow default, otherwise known as a depreciation. Historians looking back 100 years from now, they make not so fine a distinction between a steady and aggressive depreciation of purchasing power and an outright default.
Yeah.
When we look back at the Roman Empire, we say, the currency collapsed, they defaulted. Well, that happened over a couple hundred years, but still, it was a default. It was a slow motion default. And that's what we're saying. I mean, you probably believe, like I do, that at some point we're going to have some sort of a reset because the debt loads that have been built up are just too large. And who knows what that debt reset is going to look like, or the great monetary reset, I think, is going to involve gold in some form or fashion. But still, if you look down the road, you don't have to have a financial apocalypse. You just have to have the repercussions of 45 years of ever easier money and ever greater debt accumulation. Those repercussions are going to mean that the purchasing power of your currency, usually and primarily the dollar these days, is going to fall at a greater rate. So you need to lock in the current exchange rate with real money and protect yourself through monetary metals.
Yeah, absolutely. And, I think you hit a really important point. Of course, the Federal Reserve can create money out of thin air, and they can backstop the borrowing and spending. And I mean, the MMT people will tell you that the modern monetary theory people tell you what you can do it forever. But we saw what happens when they abuse that, with the massive amount of money creation during the pandemic, and we had that bout of price inflation. So the central banks are really walking this tightrope right now. On the one hand, they're trying to keep that inflation under control, and by under control I mean so people don't notice it. And on the other hand, they've got this massive bubble of debt that is having to now be serviced at these higher interest rates, which is also unsustainable. And at some point, you walk a tightrope, you're gonna slip and fall. And I agree with you. At some point, there is going to be this reset. And I'm kind of with you in the sense that I think it's going to be more of a slow bleed as opposed to an amputation, so to speak. But not to get too graphic with my analogy, but it's definitely problematic. And again, that's why people like you and I hold on to precious metals, because I'm not real fond of seeing my hard-earned wealth dribble away, thanks to central bankers.
Yeah, and there are some really smart people out there who make really good arguments that it's not like it was in the old days. A lot of this money creation is sterilized by just going back into reserves at the Fed,
right?
Not being loaned into the economy by the banks. Therefore, you don't have the multiplier effect. But one of the things they forget is that debt is money that has already been spent, has already been injected into the economy. And even if the debt then is sterilized and held, like a water balloon of liquidity over the economy and not circulating, the original expense is circulating. So you had, the 15 trillion or so dollars that has been accumulated or spent in the economy over the Biden and Trump administrations has been just injected into the economy and had its multiplier effect. And it's still in the economy because it's in people's salaries that were paid. It was in the fiscal largesse, everything else. I tend to think of things much more simply, that you spend money, you create money, and you cheapen the money that's out there.
Yeah.
And that's obvious in Treasury yields. If you look back at the inflection point, it's when the Fed started lowering rates. When it did the first rate cut, from then on, Treasury yields shot up and have kept going. And that shows that the smart investors, the smart money out there, doesn't believe what the Fed is saying and thinks the Fed is essentially whistling past the graveyard.
Yeah.
I don't think the Fed's that stupid. I think they are looking at the interest rates and the debt resets that are coming for corporate America, and not just the federal fisc, and saying that that's going to crater the economy unless they start lowering rates. You just can't service debts at these rates.
Yeah, and I'm not a betting man, but if I was, I would bet that we will see more than 2 rate cuts in the coming year, despite the fact that they lowered those dot plots and whatnot. It's interesting if you go back and look at the history of the dot plots and the projections that the Fed uses for their interest rate policy. They're only right like 33% of the time, which is kind of astounding when you think about it, because they're the ones that are actually setting rates, and they still can't figure out what they're doing. So
they can't, and they're losing control, as we see from Treasury yields. They're losing control of the market at the longer end, not necessarily the long end. But the longer you get away from the rate that they absolutely set, and you can see where they're losing control.
Yeah. 5, even as low as the 5 years are jumping up there. So, well, I want to shift gears a little bit and talk a little bit about the New Orleans Investment Conference. You just had I believe the 50th anniversary. Am I correct? Back in November. How'd it go? What were a couple of the big highlights for you?
Mike, I could not be more pleased. There were a number of highlights. I did not have a big political speaker like we have been known for in past years. It's been a while since we've done that. And I tend to avoid that, because most of these big political speakers, they're popular today, they're hated tomorrow.
Yeah, exactly.
even now, if you get somebody political up there, half the audience is going to be hate them, and other ones are going to applaud wildly. So it's just weird these days. So what I've done is focus on the people who I think are really smart thinkers, the people that have extraordinary minds that are explaining extraordinary times that we live in right now. Because none of this crap we're going through is normal. And there've been some really smart people out there. And we had just an incredible bench strength of speakers and presenters. We have James Grant, we had Brent Johnson, George Gammon, Danielle DiMartino Booth, Rick Rule, Jim Iurio, Dave Collum, Lynn Alden supplied exclusive content for us, although she didn't appear in person. Tabby Costa did the same thing. I'm forgetting dozens of names. It's just tremendous array of experts. And, no matter what you do every year, somebody has something to complain. There's a few complaints you get here and there. This year, we did not have a single complaint. The first time ever that awesome. In the 38 years I've been involved in the event, that we never had a single complaint. It was just went off fantastically well. I think our audience really appreciated the message. And it's not a really homogenous message. We had some variance, but the common thread, I think, is a lot of what we're talking about. None of this is normal. You've got to be prepared. The future is uncertain. You can't really plot out the path ahead in any detail, but you have to have a good feeling that you're going to want to own gold and silver and those associated investments going forward, because I think we're entering what I count to be the fourth big bull market in gold since 1971.
Yeah. We've got a pretty cool thing over at Money Metals. We've got a commemorative silver round that highlights the 50th anniversary. And on the front of it, it has a guy's face, and his name is Jim Blanchard. And I'm sure a lot of folks probably aren't familiar with Jim. Can you kind of tell his story real quick and let people know who he is?
Yeah, and first off, to give credit where credit is due, I had wanted to do a commemorative silver round for our 50th anniversary, but was kind of getting stymied which way to go to get it done. And Stefan and your organization stepped in and really just made it happen for us, and really appreciate that. It would not have happened without y'all's aid. But it commemorates the 50th anniversary of the New Orleans Investment Conference, which is really the brainchild and the legacy that was created by Jim Blanchard, who we featured on the commemorative round. Jim hired me as a junior copywriter in 1985 for his organization that was already well up and running. And he was just an incredible individual, amazingly charismatic and insightful. And he was one of the driving forces, if not the most prominent driving force in getting gold legalized. In 1971, when Nixon closed the gold window on August 15th, Jim then and there decided to lobby for the return of the right of private gold ownership. But as you know, it was illegal to own gold at the time. And he started Gold Newsletter then and there as one of his tools to lobby for that. Then he did a bunch of crazy stuff, had a legalized gold banner flown over Nixon's second inauguration, and things that would get you thrown in Guantanamo Bay these days.
Right.
He did. But he got gold legalized, and it was signed into effect on December 31st, 1974. So we've just passed the 50th anniversary, not only in the New Orleans Conference, but also legalized gold ownership in the U.S. And the conference, knowing that it was being legalized in 1974, Jim decided to have a conference to basically teach Americans how to invest in gold. And that started our event that had its 50th anniversary this year. We've had an amazing array of speakers. We had Ayn Rand's final public presentation at our event.
Oh, wow.
Lady Margaret Thatcher, Milton Friedman a number of times, Alan Greenspan a number of times, Barry Goldwater. Gosh, the list goes on and on. All of the real giants of the Sound of Money movement. It was a key event where you got to hear those people and meet them in person. And that's kind of the tradition we're carrying on today. Back then it was an extraordinary time. You had an underground media at the time of hard money investment newsletters that had some really smart people talking about what was going on and advising people and trying to figure out what was going on. These days, we have social media and primarily FinTwit, financial Twitter, now X, where a lot of these people are commenting on and really smart people. And we're kind of bringing all that together again through the New Orleans conferences. I think that's kind of our role, where you to get to meet these people that you see online.
Yeah.
So it was an incredible event, and hopefully continuing the legacy in proper fashion.
Yeah, and it's tremendously important even today. You think, well, that was 50 years ago. If you look at in the landscape of financial news and financial reporting, I still think even a lot of people that are professionals in the investment world don't really understand gold and silver. They don't understand sound money. And so there is no shortage of education that needs to be done. So I think the work is absolutely important and must go on. So we'll give you the 2 thumbs up for keeping it going and carrying that legacy.
I appreciate it. Like I told people at we had a retrospective panel, and people were congratulating me for continuing it for 25 years after Jim died. I said, I'm no hero. If you would have told me at the time, oh, here it is, dumped it in my lap and said, you're going to have to run this for the next quarter century, I would have ran for the hills.
Right.
But you do the next one because you just did the last one, and you do the one after that and the one after that. And pretty soon you look back and it's built on the legacy. And I do think it's important. One of the things I talked about at this year's event is trying to restore the sense of mission with our event, and working with your group and some other groups out there to try and on a federal level, because obviously you all have done such a great job on the state level of getting gold and silver legalized and returned to their role as money.
Yeah.
I'm trying to organize an effort to do that on the federal level as well. So stay tuned for that. But I'm trying to take our event and what we do of Gold Newsletter and restore that sense of mission to bring back sound money, because it's more important than ever, because history's rhyming again as we speak. And there's going to be some interesting times ahead, and people need to be able to protect themselves.
Yeah, absolutely. Well, let me get you out on one more. I'm going to shift gears a little bit one more time on you here. And one of the things I thought was interesting, kind of looking back at last year, is that, the miners never really caught up with the gold bull run. As you're looking ahead and kind of analyzing the landscape, do you see the miners as picking up? I mean, is this kind of a buying opportunity now, or are we still going to face some of those headwinds that they were dealing with last year?
Yeah, I think it has to. They are so cheap, and they have always offered some degree of leverage to gold. And the higher the gold price goes, the more attractive the economic argument is for miners and finding new deposits and the like. So it will happen. It's been mixed up this time. It's not a typical bull market for a number of reasons, but primarily I think that the speculative end of the metals, the speculative fund flow has been stolen from it to a large degree by Bitcoin, by crypto, by AI. And other ways to get leverage on the metals. You can go through, you can have 2x ETFs out there for gold. You can buy the indices for the miners and then do that with leverage. You can play futures and options. Have been much more popular now than they were even 10, 15 years ago. So there's other ways to get leverage, but I think it still comes back to the fact that the miners are obviously necessary, and the higher the gold price goes, the higher the silver price goes. Again, it's inescapable that they will start to attract more funds, and they're going to catch fire again. The issue with them, or the advantage with that sector, is it's so tiny. It's a fraction of the market cap or volume that you get in any other investment asset. So you don't have to have it be the new flavor du jour on CNBC. Right. You just have to have it dip a ladle in the fund flows to go to these other speculative sectors, and it's going to catch on fire.
Yeah.
And I think that's going to happen. And I think this year is the year where it does.
Well, outstanding. So where can folks go to find your newsletter, to follow your work, and learn about the investment conference? All things Brian London, where do they need to go?
Well, it's not as easy as brianlondon.com, but it's not far from it. You can go to goldnewsletter.com.
That's easy.
Very easy. You can find get a free copy of our Investor's Guide to Gold and Silver, which covers all the different ways to invest in the sector. And NewOrleansConference.com to find out about our annual event. It's coming up this next fall, the first week in November, this fall of 2025. And the earlier you register, the more money you save. We don't have the speaker roster begun yet for this year's event, but if you look at last year's event, you can bet a bunch of those people are going to be back, and you'll get a flavor of the kind of people that we get. And also, all of our recordings and transcript for last year is available to purchase, so you don't have to miss out on all that great market intelligence.
That's awesome. So what folks can do is they can register early, take the money that they save, and go buy a couple of those cool silver rounds.
I love that idea. You should be my marketing manager there, Mike. A great angle. I appreciate that.
Well, you know what my wife says, even a blind squirrel finds a nut every now and again. So.
Yeah.
Well, I really appreciate you taking time out of your day. I know you're a busy man, and really appreciate the work you're doing. And again, I give you the 2 thumbs up, and look forward to talking to you again and seeing how things play out as we move into 2025.
I look forward to it as well, Mike. And back at you, the work that you are doing, the work that your team is doing is just incredible, and very happy to be associated with you all in any way.
Well, I appreciate that. And again, thank you so much.
Well, I hope you enjoyed that interview, and that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast, and tune into the Money Metals Midweek Memo podcast as well. To listen to any of our audio programs, just go to moneymetals.com/podcasts, or find them on places like Apple Podcasts, Spotify, or other podcast platforms. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week, and don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.